and instant expert analysis.
On the back of that CPI print, which came in just a touch hot, but not much hotter than anticipated. S&P futures then down by 0.25%, waiting for President Biden to make his appearance in Israel. Of course, his trip, not what it was supposed to be. He's not going to be speaking to those Arab leaders as a result of that blast at that Gaza hospital. The two-year yield here, 5.2% right now. We are seeing some buying of treasuries, those yields coming down just a touch. As we saw yesterday, the story was very much about yields going higher, Tom, on the back of the retail sales data.
Futures currently struggling for directions. DAX futures are flat. FTSE 100 futures flat as well. CAC current is pointing lower by 0.2%. And of course, we'll see how the higher oil price plays in to the sector story as well, Anna.
Yeah, absolutely. Waiting for markets to open, waiting for stocks to open. But we do have that higher oil price to factor in, don't we, Tom? So as we wait for these equity markets to show their hand, just over on the far side of the chart here on the GMM, we've got commodities. You can see gas oil is higher. WTI and Brent both higher by at least 1.5%. That's off earlier highs, actually. We've been a little higher than this. Both of them were up around 2% or more earlier on in the session. But this is to do with geopolitical risk, and this is to do with the fact that the Biden visit is not what it was set out to be initially. Certainly part of it cancelled. The meeting with Arab leaders cancelled. And it was around the time we got that news that we saw the initial spike up in oil prices, we're told by the team. This is what we see on sovereign bonds then. This is the yield story, yields going higher, which was the story we covered on the back of retail sales. That was the trend, and it seems to be a trend that is in place again, once again here in Europe. These are stocks then underperforming a little, but the fact that none of these are coming up green or red suggests that these are not particularly outsized moves. They're pretty small moves. Down 0.1% on the CAC current, the IBEX, the FTSE MIB, and the FTSE itself fairly flat this morning, perhaps supported a little by what we're seeing on energy prices. Tom, what do you see on sectors?
The standout sector right now is technology, and that can be put down to two or a couple of factors. One is the run-up in yields that we saw yesterday, two-year yields in the US on back of stronger data, punching back above levels that we last saw in 2006. So it's the high yield story on stronger US. But it's also the question marks about the chip sector. Nvidia took a bit of a hit yesterday on the back of the restrictions coming through from the US, and then you have the disappointment around ASML, and that is going to be a drag in Europe. Technology as a sector now down 1.4%. ASML is falling around 4%. Basic resources also off by 0.3%. Here's the energy story, though, on higher oil prices. The last time I checked, we saw gains of between 1 to 2% across WTI and Brent. Energy as a sector up 0.5%. Another couple of standouts, utilities down 0.4%, banks up 0.2%. We've had the earnings coming through from the US, the read across then partly for the European story. But again, it's technology that remains in focus for us really across your sectors. It's a mixed picture across the benchmark, losses of just over 0.1%, Anna.
Okay, let's talk about what we're seeing in these markets then with Sophia Halter-Acosta, who joins us today from the Markets Today blog. Sophia, we didn't talk to you last time because we just heard from Lizzie on the subject, but the UK data, really important, I guess, in terms of inflation, not coming down as fast as expected, but not coming in much higher than anticipated. I wonder where this leaves the Bank of England.
And where it leaves markets, right? It's kind of the confusing narrative. We saw wages yesterday softening, but not very fast. And the fact that inflation, the core number actually is lower than it was the previous month, but not as low as economists had predicted. So again, everything's kind of going in the right direction, but far too slowly. So what the BOE will have to consider is whether they're doing enough, or whether they've done enough to really fight inflation. Actually, when we looked at the BOE pricing at 7:30, nothing really has changed. So traders are still very much on the fence when it comes to an interest rate hike before the end of the year. That could be November, that could be December. There's still 2 BOE meetings this year. But, you know, again, was the BOE pause too early? I think there's a few questions about that. And has that kind of the effect of the 14 consecutive interest rate increases, has that really fed through to the economy already? Goldman Sachs had a note out last week that said actually less than half of it has yet to factor through to the economy. So can the BOE afford to wait? I think that's the key question for markets. You saw the rise in the pound, not much move in other UK markets, suggesting really this doesn't move the needle, doesn't really change the game on BOE rates.
Yeah, and just briefly checking in on gilts, because there was a call from Venram over on our MLive team suggesting you could get up to 5% on the 2-year gilt, currently at 491. It's a move higher by 3 basis points. Switching focus to China then, are we convinced that there's been a turnaround now, that the bottom has been put into the China economic story, that things are going to look brighter from here?
They are looking brighter. I think the hard data suggests it. The question is how vulnerable it will be, and is this kind of a one-off story when it comes to improving consumer confidence, or can this be sticky? Sticky in this sense would be a good thing. I mean, we did see households run down their savings rates. This is a good thing for China because savings rates have been incredibly high. People are reluctant to spend. Retail sales were a lot better than estimated, but still what's weighing down on the economy is the property market, and there's no real quick fix for that. The market is concerned about that, and also kind of looking ahead to the future. And I do think that markets don't look at China's economy for this year. They look at it in the next 5 years. It's unclear how China could kind of fix that. How can it replace a slowing property market when it doesn't really have other industries and tools that are advanced enough to replace that GDP hole left by housing? I think, you know, the other thing to watch out for is whether we will get more stimulus measures out of China if that 5% GDP goal looks very much within reach.
Okay, Sophia Horta-Acosta from our Markets Today team on the UK and the context around the China data. Of course, you can get more from Sophia and the rest of the team on the Markets Today blog. It's on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. A really big corporate story for us today. It's the most important, arguably, tech story in Europe. Is ASML Holdings, the maker of these very sophisticated lithography machines that produce and help produce chips globally. Currently, that stock is down 3.4% on disappointment around orders. The order book falling 42% in July through September to 2.6 billion euros. They have been an expectation, estimates of 4.5 billion euros. So a big drop there, a big miss in terms of the order book from ASML, and that stock being punished.
Okay, so the stock is down. We are looking for some key data today. Let's go through what is on our radar. At 10 a.m. UK time, we get CPI data for the euro area. This is final readings, of course. Last month, both headline and core inflation fell, and economists expect that underlying price pressures are easing. And later in the evening, the Fed's Beige Book will be released. It will likely give signals about economic activity that has softened. Finally, Tesla and Netflix release earnings today. The streaming platform is expected to add more than 6 million subscribers, while analysts see Tesla's edge over rivals eroding due to product launch delays, Tom.
Okay, coming up, Goldman Sachs suffers its 8th straight quarterly profit drop. We break down the latest US big bank earnings next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. We are 9 minutes into our European trading session. European equity markets down modestly today, down around 0.3%. The FTSE 100 down 0.2%, despite the fact we have a higher oil price. Let's check in on some of the individual stocks that are on the move. Joe Easton has a briefing. Joe.
So we're still waiting on a price on Nexi, which means only one thing, that stock's going to rocket. I did see some pre-market indications of it significantly higher, but I believe there may be a halt over on the Italian exchange. We'll wait for that as Bloomberg reports potential takeover interest from private equity. And the deals team also on a roll because they had another scoop out on Continental, the parts maker, the auto parts firm, potentially offloading some of its automated technology that goes into EVs. That one rising around 3% at the moment. UCB is a pharmaceuticals company listed over in Belgium. They actually had some really positive drug news out today. Was up around 4% at the open, but it's coming back down. It's a skin disease that they say they're going to be able to treat. We'll have to read into some analyst commentary out that one, but a clear move up to the upside is Adidas gaining after they released their quarterly results a week early, better than expected, partly due to them selling down all that Kanye West stock that they have from their Fortnite partnership, and also just a better than expected sportswear division in general for them. We're going to flip over onto the second board. We're at that time where there's so much to remember in earnings. ABB, the robotics company over in Switzerland, disappointing. Some of their earnings were softer than analysts were expected. Now, Just Eat, that looked pretty negative to me on their sales, but they are also doing a buyback, which is where I think the strength is coming for that one. In terms of the airlines, now, United Airlines in the US yesterday cut their guidance, saying that the Israel war will affect their flights into the country, unsurprisingly. Now, the most exposed firms to that issue in Europe are Lufthansa and Wizz Air. Wizz Air gets around 2% of its revenue from Israel, and that stock is down. We've had Citigroup downgrading both of those stocks today. Finally, on the last board, bit of an eclectic mix here. So Shell, they're doing a deal with the Qataris. That broke earlier today on the terminal, and also the rising oil price. Not too much movement, but trading close to a record high. Worldline jumping in line with Nexi. That's their big rival. So read across from that story, boosting the payments firm. And DSV broke 2 minutes ago. The CEO stepping down, surprisingly. The shipping firm falling 2%.
Okay, Joe Easton from our equities team, thank you very much indeed. Let's do a deep dive on these equity markets with a particular focus on the earnings story now and bring in Patrick Spencer Vice Chairman of Equities at Baird. Patrick, we can talk about the geopolitics, we can talk about the energy component, but reading through your notes, you're relatively constructive. And the line that jumps out from me is the bright spark. US earnings remain the bright spark. What could the catalyst be when you look to earnings?
Yes, okay, morning, Tom. First of all, I think we should wish the bull market happy birthday. It was a year old last week. The S&P up 20% from its October last year. So the backdrop isn't, too depressing. The earnings basically obviously have been challenged over the last year. Certainly input costs have been rising. Obviously, prices have been rising. So there is concerns about margins going forward. But in terms of outlook for earnings, in fact, for this quarter and next, I looked this morning, about 7% of the S&P, we're actually going through the third quarter earnings at the moment. 7% of the S&P have reported and 85% actually had beaten. So we're looking for this quarter to be flat in terms of earnings, but the comps get much easier going forward. We're looking for 7% growth in earnings next quarter, looking for 12% earnings next year. So you've seen, and you've seen a constant line of revision upwards of earnings estimates.
Okay.
So anyway, sorry.
Oh, no, that's interesting. We were talking to somebody yesterday who was saying they hadn't seen as much upgrade to earnings as you might have expected given the resilience of the US data.
Sure.
And I wanted to ask you about that resilient US data. I guess we'll be looking as ever for clues on the US consumer.
Yes.
And just retail sales yesterday and other data points we've had of late have painted a resilient picture on the US consumer. Are you expecting to see more of that?
Yes, I think so, and I think there's this fatuation with interest rates. One thing I did look at this morning as well is what interest rates have done for the last 50 years. And they have been, on average, 4.9%. And what are they at the moment? 5.2? I think on the 10-year, I think they were 4.8 yesterday.
I suppose it's because it's much higher than the recent history when a lot of these tech businesses were formed.
Sure. But your question was about the consumer. Yeah. And the consumer is, if you look at the bank earnings, they came in much better than expected. The credit card business is holding up okay. Credit quality is actually good. So the underlying consumer, according to the banks, are doing reasonably well. And as long as employment holds up, that's the key. As long as employment around 3% is holding up, wages are holding up at 3%, the consumer's in pretty good shape. Now, what's happened in the market is that obviously everybody's worried about the consumer, so the consumer discretionary stocks have been killed, obviously this year. And places to hide are places like the tech stocks, which are almost big cap tech has almost become a utility, if you like, because they don't have debt. They're under 30 times earnings. They've got free cash flow, double free cash flow yields, they've got they've got basically PEs of around under 30. And I remember back in the 90s, you had PEs of 50 to 100 times in the last internet boom. So I think you're seeing a dichotomy in the market. But to your question, I think the consumer's holding up very well.
Well, on the tech story, the Magnificent Seven, they've done a lot of the heavy lift. We've got a chart that shows how much of the heavy lift has come through in terms of the Magnificent Seven lifting the NASDAQ 100. Do you need that breadth to be able to have that confidence around 7% earnings upside for the next quarter, 12% earnings upside for next year? How important is the tech component within that view?
Yeah, it's a great question. I think as interest rates rise, the normal thing is that long duration stocks suffer, and that's quite the reverse. As you say, they've actually done all the heavy lifting. And as I say, I remember back in the 90s when these stocks were 50 to 100 times. PEs, they're now in the US, they're on 30 times. And you've got AI, which I think is the real deal, and that's why these stocks are going up. So I think tech, continues to do well. But the broader market, to your point, is looking cheap. If you take the tech stocks out of the S&P, you're looking at 15 times. You go even lower to the smaller cap stocks, they're trading on 13, 14 times. So I think the breadth actually, it's quite normal. I've just said congratulations to the first year of the bull market. It's quite usual that the breadth, initially is quite narrow. And as the bull market matures and gets, a little bit actually sort of more developed, then that will move out into, the other stocks.
Where will that catch-up trade benefit most then, Patrick?
Yeah, that's another good question. As I say, I think the tech stocks will continue to do well purely because I think AI is the real deal, and irrespective of interest rates, I think that is the place to be going forward, especially with CapEx. But I think consumer discretionary for us is beginning to look really, really interesting. Healthcare is beginning to look really interesting because of the weight loss drugs. You know, they've been crucified in the last few months. And we've been doing a survey recently about restaurants. You know, if 20% of consumers actually took those weight loss drugs, I think we would only lose 1-2% of earnings on the restaurant stocks. So it's a huge impact headline, but actually a bottom line impact is very, very small. So I think consumer discretionary, you know, certainly for us is very interesting, and the restaurant stocks.
Patrick, thank you very much. Patrick Spencer, Vice Chairman of Equities at Robert W. Baird. Thank you very much for coming to speak to us today. Let's talk about the US major banks and what we've heard from that sector. We were just discussing it in passing there. The diverging fortunes of Goldman Sachs and Bank of America in focus this week. Both of those businesses have reported third quarter results. Let's dive into some detail. Let's bring in Bloomberg's EMEA Finance Managing Editor, Tom Metcalf, who's on set with us as well. Tom, good morning to you. So what is the verdict then on these two businesses and how they've performed?
Yeah, I think Goldman's quarter's probably been characterised as a bit messy. So there was definitely good signs about its capital markets business, which is obviously the core of Goldman. But you're also seeing, you know, those sort of ill-fated expansion attempts into retail, into something like Green Sky. That was still kind of costs in the bank. There was some, you know, sort of one-off cost items there. So, and I think that was reflected in the stock, down a little bit. But if you sort of buy into what Solomon was saying yesterday, things are looking good for Goldman, because if those capital markets return, they're saying, look, as ever, we're number one in those spots, so we should do well. Flip side, Bank of America, you go through those quarters, very strong, net interest income up. And they were also saying, you know, their own traders had a record quarter, obviously coming from a lower base than Goldman. So that was looking positive. But again, you know, there is that doom and gloom looking forward. There's so much uncertainty here. No one is coming out and saying, you know, the future ahead is rosy.
So how do BofA, how do Goldman compare to JP Morgan, Wells, Citi? What are the linkages in the earnings story there?
Yeah, I think it goes back to net interest income again for those three banks as well. So similar story to Bank of America. I think those three banks all had basically a record third quarter for, you know, for at least a number of years. So again, a strong performance. But you heard what Jamie Dimon was saying. He was very gloomy. He was saying, look, there's a lot of uncertainty here. You know, we could be taking bigger loan loss provisions in future. So again, a bit of a mixed picture.
Okay, yeah, gloom on the loan losses and gloom on the sort of geopolitical wider picture as well. What are we expecting from Morgan Stanley today? I think they're the next big one to report.
Yeah, the thing for me there is their wealth management arm. How's that doing? And we just heard, like, you know, the US consumer is holding up. And, you know, typically, you know, the wealthier you are, the sort of more resilient you are in tough situations. So I think that will be very, very interesting. And, of course, a bit like Goldman, known for their capital markets business. So will they do as well as Goldman did and say they're doing?
And James Gorman as well, the lineup around who takes over for James Gorman as well as he gets ready to step down at some point from that bank. Really interesting. Tom Metcalf with a roundup, of course, of the bank earnings and what came through specifically for Bank of America and Goldman. Thank you, of course, from our head of finance team in EMEA. Let's get more details, at least we will get more details in the next couple of minutes around ASML's results. That stock taking a hit, disappointing after order bookings come in worse than expected, and significantly so. We break down the numbers next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Markets Today, 23 minutes into a European equity session, which shows European stocks are on the back foot, and actually increasingly so. Sentiment deteriorating a little as we go through this morning's session, down by 0.5%. Even on the FTSE, we've seen oil prices go higher, but that is not supporting the FTSE today. We're down by more than 0.5% on that particular market. US futures also weaker, down 0.3% on E-minis. A focus, of course, on the geopolitics and also some of the concerns around property in China. Let's talk about one stock that has made headlines this morning. Shares in ASML are falling after Europe's most valuable technology company released third quarter numbers, and bookings fell more than 40%, the weakest figure since the depths of the COVID pandemic. For more, let's bring in Bloomberg's Netherlands reporter April Roach, who has details. April, how did ASML fare then in the third quarter? Take us through some of the detail.
Good morning. Yes, so as you said, ASML's orders fell over 40% in the third quarter, missing analyst estimates. And this serves as a sign that the demand for the company's chip-making machines is weak amid an ongoing sector-wide slump in the semiconductor industry. ASML said the lower order intake was as expected. And in the current environment, they're seeing customers being very cautious with cash and also cautious with putting in orders. But ASML did maintain its sales growth forecast for the year, saying it still sees sales growth towards 30% compared to 2022.
Okay, so it did put out that forecast around next year. What about demand overall, April, for its machinery and where that demand is coming from?
Yeah, so ASML said it's still looking at an order book of over 35 billion euros, but as their customers continue to be uncertain about the shape of the demand recovery in the industry, ASML expects 2024 to be a transition year. And what this means is that they said they expect next year will be a pivotal year to prepare ASML for what they think will be significant growth in 2025. And the chief executive officer said, based on their perspective, they're taking a more conservative view and expect a revenue number similar to 2023.
It's been a year where we talked a lot about export restrictions, April. Is ASML expecting any impact from export restrictions on its tools from the US and Europe to China?
Yes, so yesterday the US announced it is expanding the scope of manufacturing gears subject to export restrictions. And ASML said it's still in the process of digesting the regulations and making a full analysis. But for its preliminary assessment, ASML said the new rules affect a limited number of Chinese factories that produce advanced semiconductors, and it doesn't see a material impact on this year. However, in the longer term, the rules will likely impact the regional split of its system sales in the medium to long term. And to put that in perspective, currently, China makes up 46% of sales in the third quarter for ASML, which is significantly up from 2Q.
Okay, Bloomberg's April Roach in Amsterdam with the ASML story. Thank you for breaking that down for us. Plenty more coming up as these European markets are lower by 0.6%. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. President Joe Biden travels to Israel with tensions high after an explosion at a Gaza hospital killed hundreds of people. Hamas and Israel trade blame. Elsewhere, inflation in the UK proves stickier than expected, leaving open the possibility of a further rate hike from the Bank of England. Sterling initially gained on the news. Plus, ASML slumps as orders fall in the third quarter amid a sector-wide slump in the semiconductor industry. Lots to talk about this morning, Tom, from the geopolitics, of course, but also some really interesting earnings stories, a bit of M&A even in this market. But markets are a little jittery and losing confidence, it seems, through the session.
Yeah, as you say, a combination of factors, and we are seeing a downside day now. Looks set for a second straight day of losses. Early doors, of course, in terms of the trading session today, but downside of 0.5%. There is deep anxiety, obviously, around the potential for this crisis and this conflict in the Middle East to spread. Biden will be on the ground shortly, we know. The DAX is currently down 0.2%, and the FTSE 100 is off by 42 points at 7,632. The inflation print hotter than expected out of the UK, maybe opening the door once again for the BOE to potentially hike. We continue to, of course, assess the data out of the UK, and the picture has been mixed, but certainly it's a reminder that inflation, getting it back down to target, is going to be a tough task for these central banks. The data picture as well, strong data out of the US, strong data out of China, but good data being bad news, it seems, for these markets. Across the sectors then, we'll continue to look at the energy sector and technology, ASML. So that story around softer semiconductor demand really playing out for ASML. The order book looking very weak indeed in terms of the latest numbers from the most valuable tech company in Europe. And that is dragging on the tech sector, currently down 1.6%. High yields are not helping either for that sector. Energy currently up 0.3%. We've seen the run up in terms of Brent WTI prices on the back of that angst around the Israel-Hamas conflict. Those prices up between 1% and 2%, and that is leading to gains in the energy sector. Travel and leisure up just 0.1%. Retail also performing slightly better, up 0.4%. But it's a mixed picture across these sectors, and broadly, again, across the European benchmark, so far losses of 0.5%, Anna.
OK, let's get back to the source of the latest geopolitical news in the Middle East. Hundreds of people were killed in an explosion at a hospital in Gaza City, with Hamas and Israel now trading blame over who was responsible for the blast. And while the cause remains unclear, the incident prompted Arab leaders to cancel a summit with US President Joe Biden, who is travelling to the region in an effort to contain the conflict. For more, Bloomberg's Oliver Crook joins us from Tel Aviv. Oliver, bring us up to speed then with the latest.
That's right, and as we've been reporting overnight, you wake up every day with new pieces of information, and a lot of it is often very devastating. We have understood from the Palestinian, the Gazan health authorities that at least 500 people were killed at this blast at this hospital in northern Gaza, in Gaza City, which has, of course, prompted a huge amount of outcry across the world, condemnation directly condemnation of Israel by the Gazan authorities, by Egypt, by Turkey, and a number of other nations. Israel and Benjamin Netanyahu have said that they did not target the hospital. The IDF has been putting out evidence this morning, they say video evidence, that this was in fact an Islamic Jihad rocket that malfunctioned and that fell back on the territory. But there is not enough conclusive evidence at this point. Many Western leaders all have condemned the action but have not pointed the blame at anyone yet, and namely Biden, who we're expecting to arrive here any minute now. And of course, this is just ratcheting up tension in a place where already Biden had a very, very fine tuning job to do here when he arrives here in Tel Aviv, and the second leg of his journey canceled, and that, of course, has only gotten immensely more complicated overnight.
And to that point, Ollie, it was going to be a tightrope walk, wasn't it, for the US president? It was going to be, as you say, incredibly complex before this explosion that we've seen at this hospital in Gaza. How does this change the trip for the US president?
I think it changes the trip completely and fundamentally. There were three portions of this trip, three goals that Biden really came here with. One was to show, again, what every U.S. official has so far said is total support for Israel. The second was deterrence, again, telling other powers within the region not to get involved. The repeated word we have heard was don't, from Biden, from Blinken, from all of the others. We have 2 aircraft carriers deployed to the eastern Mediterranean, as well as we understand 2,000 U.S. troops on standby on high alert. And that sort of talks about the deterrent side of it. And then, of course, the final and probably the most important in some ways to finding a durable de-escalatory ramp here is diplomacy. And that second leg of the journey in Jordan, he was supposed to come to Tel Aviv first and then to Jordan to speak with Mahmoud Abbas, the head of the Palestinian Authority that presides over over the West Bank, with the King of Jordan and as well as the President of Egypt. That meeting has now been canceled because all of these leaders are pointing the figure at Israel. And in addition to that, the people on the streets, we've seen protests across the Arab world in protest to this against Israel. But again, they also see Joe Biden and the United States standing so firmly behind them that it puts the leaders of these countries also in an extremely difficult position.
Okay, Bloomberg's Oliver Crook on the ground for us in Tel Aviv ahead of that expected visit by the US President Joe Biden in potentially the next couple of minutes, the next hour or so. For more on the cancelled summit then between the US, Jordan, Egypt and Palestine that Ollie mentioned, we are joined by Paul Wallace, who leads our economy and government coverage in the Middle East and North Africa. Paul, explain the significance then of this summit being cancelled.
It is a very big blow to Joe Biden, I think to Western countries as a whole. This trip by Joe Biden, as Oliver was explaining, was not just to show solidarity toward Israel, but it also, he also, and the US is also trying to ensure that aid gets to Palestinian civilians in the Gaza Strip. And this summit was a big part of that. I think the Americans are also realizing it's crucial to try and get Arab support, or as much Arab support as possible, for Israel, even if it's private rather than public, so as to stop this conflict from escalating beyond Gaza. So it is definitely a big blow for Biden and his trip, which is effectively starting any minute when he touches down in Tel Aviv.
Yeah, we'll wait for his arrival. A lot of focus, understandably, on this blast at the hospital in Gaza then, Paul. What has been the regional response? All sides trading allegations as to who caused this, of course, but what's the regional response been?
Very much so. The Arab world and countries like Turkey have reacted with outrage. In unambiguous terms, they are saying this was Israel's fault. They're blaming Israel for the strike on this hospital in Gaza City in the north of the Gaza Strip. As Oliver said, Israel has presented what it says is evidence that shows this was not a strike by the IDF, but rather a misfired rocket by Islamic Jihad, which is separate from Hamas, but often aligned with its anti-Israeli goals. But certainly in the region, this has really exacerbated tensions, which were already very, very high. Israel has already got a lot of, even before yesterday, Israel was getting a lot of criticism from the likes of Turkey, from the likes of Saudi Arabia and others about its bombardment of the Gaza Strip. But this is just inflaming tensions even more.
Okay, Paul Wallace, who leads our economy and government coverage in the Middle East and North Africa. Thank you. Stay with us. Plenty more ahead. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
Welcome back. This is Markets Today. 41 minutes into the European trading day. Losses of 0.3% across the European benchmark. Let's focus on technology now. Investors looking to earnings season for a dose of good news are hanging their hopes on a familiar group, big tech. The tech-heavy Nasdaq 100 is up almost 40% this year, fueled by the likes of Nvidia, Alphabet and Amazon. But that rally has flattened out in recent months, with concerns remaining over valuations and headwinds, including high interest rates and sticky inflation. It comes as Europe's leading investors and entrepreneurs gather tomorrow for the annual Investor All-Stars event here in London. Very pleased to say we are now joined by Manish Madhvani, who is the co-founder and managing partner of tech and investment advisory firm GP Bullhand, which puts on the All-Stars, Investor All-Stars event, an annual event. Manish, thanks for coming into the studio. Before we get into the event and what to expect there, what are valuations, what are the VC flows, I should say, looking like now? We've got PitchBook suggesting that VC flows for startups in Europe are down about, 60% in the first half of this year from 2022. Are we starting to see, is there more pain ahead, or are flows starting to pick up now?
I think it's been a really tough adjustment from obviously a lot of money flowing into the sector. And now this real search for capital efficiency and being profitable. And I guess what we've seen, first 6 months, really tough. A lot of companies had to adjust, and they almost enter this bipolar state where they've got to focus on efficiency, But obviously, if they're not driving innovation and growth, then the long-term outlook is not great. I'd say we're just starting to see some green shoots coming through now, and feels like for the first time in a long time that the sector is getting on the front foot. And I think some of the stats that we're looking at closely, when you look at $100 million rounds, so the mega rounds that are fueling the leaders, there was actually a 47% jump quarter on quarter, so Q3 to Q2. You've got to put into the summer effect into that. But even then, when you look at historically, it's starting to get, it's 10% up on last year and starting to get back to 2019 levels. There is an AI boom within that. So some of the biggest rounds, Anthropic was a $1.3 billion round from Amazon, and Databricks raised $500 million. So you're starting to see there's areas of interest, but AI and kind of this next innovation that the market is fascinated by, that is fueling the next level of growth and innovation.
What is your take on AI? Is it rational? I mean, some VCs I speak to say a lot of silly money has been thrown into this space. There's concerns about the cost of compute, so just the sheer amount that you have to invest to get the compute under these underlying platforms. How does that AI story evolve, do you think?
So I think AI and machine learning, it's been around for quite a long time. What's really changed is, I guess, ChatGPT captured the world's imagination. And that has fueled a lot of investment coming into the sector.
Are you seeing bubbles in the AI space?
You're seeing some investments into the tech as opposed to commercial applications. And it may lead to commercial applications, but I think the way we look at it is, what effect is it really having on fundamental sectors? So the music sector we've done a lot in historically. You look at the music sector now, creation. So everybody heard about this ghostwriter who basically cloned the voice of Drake and The Weeknd and created this incredible track that everyone thought was a genuine track, but was all computer generated. Downloaded nearly 1 million times over the weekend. So blew the industry apart. Obviously threw up a load of legal issues and claims, but the impact on content generation is clear. Then you look at accuracy. Can you predict a hit song from the music industry? It's 97% accuracy that AI can detect whether this is going to be a hit now, because there's so much data and so many patterns. And then you look at translation. So on Spotify, you can go on to now and download any podcast, translate that to any language that you want. And that has a massive impact, obviously, on consumption. So you think about those areas, the impact it's going to have on the industries. And that's happening in a lot of industries. So the effect is going to be huge. It's just getting the right commercial models now.
And ones that stand up to legal challenge, I'm sure, from what you said there, Manish. So you're obviously very excited about the AI themes. And you're focused this week on your own conference, but we're going to see this event, the government running this AI event at the beginning of November. I know Tom's going to be there. This is around AI and AI security. From the industry's perspective, what would you like to see coming out of that kind of conversation?
I think there's got to be a recognition that AI is a tool. It's a tool for human beings to use to make them more productive. And you don't want to stifle that, but you want to make sure it's done in a measured and controlled way. And I think the effects are going to be large. They're going to change the nature of jobs. They're going to change the way people interact in companies and societies. And I think that's the nice thing that we're seeing with a lot of companies that we're seeing at grassroots levels. They're coming up with very practical, very sensible solutions. So some of the companies that people will see are Ravenpack, Orbis Software. They're really just accumulating huge amounts of data and then making sense of them, turning them into valuable insights for people. And I think the same is going to happen in media as well. You can create the tracks in the music industry, you can create video from really little input now in a very fast amount of time. And that's going to be good for society. You then just have to grapple with some of the potential job replacements and training issues. And I think if we can get ahead of those, that's going to be one of the most interesting things that could emerge over the next few months.
So that's on AI. It's always a reminder at your event, the All Stars Investors event, just how much work is being done by tech companies and founders, investors across Europe. It's always a reminder just how much activity there is, even in challenging times like there are now in terms of raising capital. But you've talked about the need to kind of scale, the ability to scale and the challenge, particularly that the UK faces there. I'm thinking of Britishvolt, which is an EV battery maker that failed, Graphcore, which is a chip maker that's struggling to raise capital. What do you think is needed to scale some of these startups?
Yeah, I think, there is an issue with the public markets, and I think everyone has spoken about that in Europe. We're seeing signs of life in the US. 3 IPOs obviously got away, but small free floats, 10%. In Europe, it's really at a 13-year low in terms of IPOs. What you're seeing, though, is the industry is reacting. So the private equity community is really stepping up. And you see the amount of funding that's been raised by the growth equity and the private equity funds. They're now, some of them, managing 60 billion under management. That's replacing the IPO market to a large extent. And I think the stat that we track a lot is we kind of set Europe this ambition. Can we raise and build $10 billion companies? And there was 0 when we first started tracking this in 2000. Now there are 19. And that's really showing the ambition levels of the entrepreneurs is rising, but also the financing chain is working. The IPO market is the one that I'd love to fix, because that's how we really get to the next level. And there we need all the things that people have spoken about a lot. Analyst coverage, retail investors, a lot easier to deploy capital.
Okay, really interesting. So the PE part is there, the private equity component is there. Now you want to see the IPO market reformed to kind of adjust to that as well. Really interesting insights. Manish Madhvani, co-founder and managing partner of GP Bullhound, ahead, of course, of that All-Stars Investors event here in London tomorrow. Let's get some more of the other top red stories on the Bloomberg terminal then. Jim Jordan has failed on the first ballot to win the US House speakership. That's as a group of 20 GOP holdouts withheld support for the Donald Trump-backed conservative hardliner. Republicans have postponed the next votes until Wednesday.
Nvidia shares fell sharply after the US restricted the sale of the company's made-for-China chips. It is aimed at preventing Beijing's access to cutting-edge tech with military uses. The company warned that the new rules could hinder product development and cause other difficulties. HSBC is blocking staff from texting on their work phones. Sources tell Bloomberg the ban will be applied across the bank, and said staff had already been blocked from using WhatsApp on work devices. Only a select few in regulated roles will be exempted. The move comes as regulators investigate the industry's use of unauthorized communication methods. Coming up on the programme, we'll get more on the markets. We're seeing interesting moves in gilt markets, moving in the same direction as the rest of Europe, but to an outsized degree. We'll get some analysis of that next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
Welcome back. This is Markets Today. 8:52 here in London. Over in Israel, we are bringing you live pictures of President Biden arriving just behind that grouping there. In the foreground, you can see a tail fin of his aircraft, and we have just witnessed the photos of his plane landing. So there he is in Tel Aviv, 10:52 a.m. local time. He, of course, is going to be meeting with Israelis there, and he was supposed to be meeting with a lot of Arab leaders, but that part of his trip has been cancelled, or the US says rescheduled. We will see where that takes us in terms of what his trip can deliver. So that is the geopolitical backdrop that we're dealing with here. Let's get back to what we're talking about in markets today. Oil prices have been higher on some of this tension in the Middle East. Eddie van der Veld joins us from the Markets Live team to talk about some of the news flow. We'll put that to one side and focus on what's been going on inflation then, Eddie, and the UK inflation print coming in a little higher than was expected. It moved the pound initially, but some of that's unwound. What do we make of it?
And I think there's good reason for that, right? Because I think, you know, the CPI readings and the RPI readings that we had today came in above expectations, sure, but that contradicted some of the wage inflation data that we had yesterday. And wage inflation probably is the more sticky of the bunch. So if you see wages coming down, that will be something that the Bank of England will cheer. And I think the Bank of England will be looking, you know, for data that confirms its view at this point, because they would like to see something that allows them to keep rates stable and to allow that transmission mechanism to work its way through markets. And I think that's what they are going to be focused on, and therefore that's what the pound is focusing on today.
On the focus around the Treasury curve, there's been a lot of discussion about when the 2-year tops out. Maybe more of the upside is going to come through towards the back end of the curve, the longer dated debt. Today you're seeing the 2-year at 5.19, so just down by 1 basis point. But you saw a big spike, of course, yesterday on stronger US data. How are you thinking about how the curve adjusts?
Right. Yesterday was just a reminder again that not all of the action is going to be at the long end, right? Because there has been this debate that maybe the Fed is done with hiking and now it's about how long they keep it there. But there is the potential, if the economy stays this hot, that they say maybe just one more. And then you do need to see those moves at the front end. So I don't think the front end of the curve, the debate around the front end of the curve is quite settled yet. We could have more movement there. But in the, you know, when all is said and done, a lot more work has to be done by the long end, and I think a lot of people will still be positioning for steepeners.
Okay, so the Treasury market focused, of course, on Fed rate hike expectations, the strength of US data, as we've discussed, but also on the dreadful geopolitical headlines that come, and oil markets also reflecting on those, and they're clearly moving on that. Yesterday, we saw an initial spike up in oil prices on the back of that. We're just bringing viewers pictures of President Biden arriving in Israel for talks there. 91.44 is where we trade on Brent then, Eddie, up by 1.7%. This is the clearest expression of geopolitical risk, I suppose.
Absolutely, and there is a risk premium, particularly in the commodity markets at the moment. As you say, you know, Brent picking up, even though demand hasn't been that strong. Another place where we see it is in gold prices, right? When we see yields rising, when we see the dollar quite strong, when we see ETFs outflows, you're expecting to see gold prices come down. That has not been the case. Gold prices at the moment sitting at something like, you know, $1,930 an ounce. So in the commodity markets in particular, we are seeing a risk premium, and it is all to do with the Middle East at the moment.
Yeah, as you say, gold currently up 0.8%. Brent at $91.52, a gain of 1.8%. Eddie, thank you, of course. Eddie van der Veld from our Markets Live team, walking through some of the key market themes as we leave you with live pictures of Air Force One. The US president has landed in Israel, a trip that was going to be hugely complicated anyway, diplomatically made even more challenging as a result of that blast in Gaza at a hospital, of course, with many, many killed in that event. That is the US president on the ground in Israel. We'll continue to bring this story to you live across Bloomberg. Stay with us. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. President Joe Biden has just touched down in Israel with tensions high after an explosion at a Gaza hospital killed hundreds of people, while Hamas and Israel trade blame. Elsewhere, the pound gains after inflation in the UK proves stickier than expected, leaving open the possibility of a further rate hike from the Bank of England. And we also look at technology with ASML orders there plunging in the third quarter amid a sector-wide slump in the semiconductor industry. Now, we're looking at live pictures of Air Force One. Of course, the President of the United States of America just about to get off the plane, greeted by the Prime Minister of Israel. Now, he's landed in Israel hours after an explosion at a hospital in Gaza killed hundreds and threatened to plunge the region into chaos. Now, the blast did draw condemnation from Arab governments who blamed Israel and will complicate U.S. efforts to contain the conflict. There is a president descending the steps of Air Force One. We did hear from Israel that it has evidence that the blast was a result of a failed attack by Islamic Jihad. Hamas, designated a terrorist group by the U.S. and Europe, blamed an Israel strike. When you look at how important today will be, of course, between the two leaders, what kind of tone and messaging, we'll also look at body language to see what the president wants to actually convey this extremely, extremely important time. Now, earlier, President Biden didn't say he was outraged and also deeply saddened, and that he'd ask his national security team to continue gathering information about what exactly happened. Now, he has arrived in Tel Aviv moments ago. I guess the first thing he'll try and do is try and seek to salvage his high-stakes diplomatic endeavor. Again, this is after this deadly explosion at a Gaza hospital, threatening to plunge the Middle East into chaos. We will see how he's greeted by the Israeli Prime Minister and a lot of officials there. We've heard from the Gaza Health Ministry that the explosion yesterday killed at least 500 people, which it blamed on an Israeli strike. So we have to wait for the facts to see exactly what happened. We also know that a lot of the Arab countries have decided they'd rather speak on the phone with President Biden rather than actually be there in person. We will follow all of the various, what the president will do. We know he has various engagements. We'll see whether that changes or not. So let's get the latest from Bloomberg's Oliver Crook in Tel Aviv, who I think is standing by very close to where the president has just landed. So, Ollie, what does this mean? What does it mean for President Biden's Middle East mission?
That's right. This is a completely different trip than it was planned to be yesterday when you wake up today and the situation that Biden is arriving into. If originally there were 3 goals for the president to achieve here, the first being support for Israel, the second being deterrence from other actors. You know, we have 2 aircraft fleets from the United States in the Eastern Mediterranean, 2,000 troops apparently on high alert. And then the third, which is arguably the most difficult and the most important, which was the question of diplomacy. So right here in central Tel Aviv, there is a huge amount of press, there's a huge amount of security. As we saw, the president has just arrived. We expect him to hold meetings with Israeli leadership as well as Antony Blinken. But what is going to be critically missing for this trip now is the second leg of it. It was supposed to begin in Israel and then go into Jordan, where he was supposed to meet with the president El-Sisi of Egypt, the King Abdullah of Jordan, but as well the Palestinian Authority president that presides over the West Bank, Mahmoud Abbas. That part of the trip has been canceled now due to this blast at the hospital, and it's an intensely difficult trip for Biden before this, and it makes it even more complicated now. And there are a number of issues that have yet to be unresolved. The namely perhaps, is the aid that is still sitting on the southern border of Gaza with Egypt.
So Oliver, what more do we actually know about the hospital explosion?
So what we've been told by the Gazan health authorities is that 500 people were killed. That would put the death toll well above 3,000, which was already approaching late in the day yesterday. We know that all of the hospitals are already way overstretched, fully packed, so this is particularly devastating. There has been universal condemnation, but there has not been universal attribution. So a number of countries, neighboring countries, whether Egypt, Turkey, UAE, Saudi, have all criticized Israel, the United States, and many of the European leaders to say we need more information to figure out what happened. Netanyahu has said that this was not an Israeli target. The IDF has been putting out videos all morning suggesting that this was actually a failed rocket by Islamic Jihad. But again, it is very hard to tell at this stage, and is, as you can imagine, an intensely sensitive subject, particularly since in the wake of this yesterday, we saw a large number of protests across a number of neighboring countries, which only turns up the temperature in what is already a very challenging situation.
Ollie, thanks so much. Oliver Kirk there, live for us in Tel Aviv. Now, we're looking, of course, at the political fallout of this as tensions go high, what it means longer term for the economy in the Middle East following the Gaza hospital blast. So this is exactly what we'll be talking about shortly. If you look at some of the implications, of course, over this longer term, it could have implications for inflation. It also has huge implications for not only the diplomacy of it, but we always and foremost think about humanitarian crisis. Joining us now to talk about longer-term implication of economics, Beata Manthi, global equity strategist at Citigroup Global Markets, and Tina Fordham, geopolitical strategist, advisor and founder of Fordham Global Foresight. So thank you both for joining us. Tina, everything's changed in the last 10 days. Everything seems to have changed in terms of diplomacy over the last 24 hours. What is Biden hoping to achieve by going to Israel?
First and foremost, Biden needs to de-escalate this conflict. The hospital blast overnight is devastating in humanitarian terms, and the fact that it's unattributed is problematic, of course, but it underscores the extent to which innocent civilians are caught up in this conflict. And what the U.S. does not want is widening internationalization of the conflict at the same time as we have a war in Ukraine.
How, Tina, will he be able actually to de-escalate these extremely high tensions?
It's probably the biggest challenge of his presidency to do so. The stakes are incredibly high from a geopolitical perspective. Emotions are running high, and that pours gasoline on the flames. It's going to take all of his diplomatic efforts. Biden, of course, has been in high office for decades, but his relationship with Netanyahu has always been strained, and he's working with Arab governments who are mistrustful of the role of the United States, and the fact that King Abdullah of Jordan canceled the summit is evidence of that. That's an extraordinary move for a Middle Eastern partner of the United States to take.
You know, we also heard from the Egyptian president, Mr. El-Sisi, saying he was talking about moving Palestinians to Sinai, saying it makes it a base for opposition. And actually, he's, for the moment, said that that's not something that he's really considering. If you look at some of the key allies, or key countries that the U.S. needs on side. Where do you put China? Where do you put Egypt? Where do you put Saudi?
So this is really important because remember when China had a role in brokering the normalization pact between Saudi Arabia and Iran, we had a lot of news flow about China's role in the Middle East. Well, we have since heard barely a squeak out of Beijing, apart from fairly tepid condemnation or criticism of Hamas. We see that as much as the United States has tried to wind down or, reduce its role in the Middle East, it keeps getting pulled back. As you mentioned, El-Sisi, the Egyptians, they don't want to take the Palestinians. Jordan already has its own share of this. So there are very few options apart from de-escalation and some sort of ceasefire.
And Beata, of course, away from this, into your world, when you look at how the markets have been reacting, they've been pretty much range-bound. So there's, concern, volatility, but then very quickly goes back to normalization.
So it's very hard to talk about the market reaction given the scale of human tragedy. But what tends to happen, the immediate translation mechanism into the markets is, of course, the oil price. We've seen that, and the strength in the dollar. So that hasn't played out that much yet. And probably it wasn't a very intuitive reaction of the markets for some market participants last week that, as you've mentioned, they've moved range-bound. Well, what has performed very well within the market is, of course, energy stocks and aerospace and defense, so that's quite logical. But in terms of the resilience, if you can call it this way, of the markets, I think one factor is the fact that actually we've entered the beginning of the conflict just after equity markets have had a meaningful correction, right? So there was less exuberance on the top of the market. And at the end of the day, the markets are in a wait-and-see mode, on alert, but trying to figure out what that means eventually for the fundamentals and for earnings.
So, Beata, you don't think this is fundamentally because either they can't price it or because they're not expecting an escalation?
So we don't know. There are lots of uncertainties, and this is why the market has been range-bound in the wait-and-see mode. But definitely there are huge risks around.
Tina, compared to 24 hours ago, is there a bigger risk now of this escalating?
Absolutely. The human civilian toll is an emotional accelerant to the conflict, and market participants shouldn't underestimate that. I mean, Beata is quite right that it takes a lot for a geopolitical risk to actually transmit into equity markets, which is why we see it a little bit in oil prices. But I can't say strongly enough, in the 25 years that I've been covering geopolitics and its impact on markets, we have never had so many risk factors at play.
Thank you both for joining us. Tina Fordham and Beata Manti both stay with us. We'll have, of course, more on geopolitics after the break as the U.S. president has touched down in Tel Aviv. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Europe, I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I call for an immediate humanitarian ceasefire to provide sufficient time and space to help realize my two appeals and to ease the epic human suffering we are witnessing. Too many lives and the fate of the entire region hang on the balance.
The UN Secretary General Antonio Guterres calling for an immediate ceasefire in the Israel-Hamas conflict. Let's bring our panel back. Tina Fordham, geopolitical strategist at Fordham Global Foresight. Beata Manthi, a global equity strategist at Citigroup Global Markets. We also have the president, of course, Joe Biden, the U.S. president, arriving just minutes ago in Israel, in Tel Aviv. He was greeted by the Prime Minister, Benjamin Netanyahu, and then he has a full day, of course, of events that he needs to attend. Tina, also, congratulations. You have a new job in briefing, right, the LSE, so briefing markets participants about some of these geopolitical risks. Now, there was an understanding, and I don't know whether it was erroneous or not, that U.S. diplomacy was going to calm things, right, until at least the president would arrive in Tel Aviv. Has that all really gone wrong?
The lack of trust in international relations is really evident here. The U.S. is not trusted as a partner to negotiations. The role of the UN is minimal. And, of course, the parties in the Middle East and the Gulf are not necessarily all on the same page. But what they will agree on is the need to stop the bloodshed, and that is the critical thing. The fact that the president has turned up in person is truly remarkable. And underscores the absence of another serious partner, but all sides are going to likely hold out.
Vladimir Putin is also meeting the Chinese president, Xi Jinping. China has remained fairly quiet, as you were saying. Do they need to start acting more on the international stage?
I'm not sure China has the credibility in the Middle East, right? Because if you look at what kind of expectations there have been from China, it's been China as a commercial partner in the Middle East and the United States as a security and defense partner. That's what Saudi Arabia wanted when it was in the midst of negotiating this deal to normalize relations with Israel, which is now obviously on the back burner. But it's very difficult for China, Russia to pursue their agenda in an environment of total chaos.
And Beata, we're hearing, of course, of incidents outside Gaza. And so when you look at possible escalation, extremely difficult, of course, to speculate at this moment. If you're a market participant, you look at the price of oil. There's also been, in the past, Iran saying they could close the Strait of Hormuz, which would have significant economic impacts. Is that worst-case scenario?
Absolutely. So oil is something that everybody is watching very closely, and of course it has translation for what happens on the inflation front and ultimately economy, right? So city economists estimate that around $10 higher oil over a sustainable period of time adds around 20-25 basis points to inflation. So these, if the situation continues, of course, it will have impact.
And because this, of course, is playing out also on social media with some things that are not verified, but it's playing out really on social media, does it automatically have an impact on business confidence, on consumer confidence, and actually just how people behave?
So what I would argue, the confidence has been already quite weak over the summer, especially because of what has been happening in China and the rate environment around the world. So we've entered that crisis with quite subdued sentiment, which we've been arguing away from geopolitical risks could have been at an inflection point of improving, right? So the fact that it's been quite bearish in a way is also helping.
I mean, we were also hearing the UK, for example, UK inflation staying higher than expected after the jump in oil prices, and it really, has offset some of the downward pressure for some of the food costs. How complicated is it for a small economy like the UK to set rates in this uncertain environment?
It's very complicated. So until yesterday, we thought that Bank of England was going to be on hold, the same for all the other major central banks. So that was a good news for the markets that we are done with the rate hikes. But of course, we know central banks are data dependent. So any big surprises to the upside, they'll be thinking about the risks.
So do you think central banks will be in a little bit of a void? I was in Marrakesh for the IMF World Bank meetings last week. And again, everyone was looking at some of the horrific news flow without really being able to analyze, react, or actually see what this means longer term.
I think it's not only going to be the inflation factor that pushes them to make any monetary decisions, right? They are weighing all the risks around, so it's they have a complicated job ahead.
Tina, do you think we'll get is a ceasefire on the cards? Is it something that you think President Biden will ask the Israel Prime Minister?
I think that's the imperative for all parties will be an unconditional ceasefire, yes. Anything other than that is going to be a match to the fire, and we're going to be talking about a lot worse than, rates being higher for longer if they fail in their diplomatic efforts.
Thank you both for joining us. Of course, panel, of course, looking at the implications of this human tragedy and the impact on the economy. Tina Fordham at Fordham Global Foresight and Beata Manthi at Citigroup Global Markets. Coming up, Country Garden is on the brink of its first default in China, saying it's unlikely to honor offshore payments on time. We'll have plenty more of that story next. And this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, distressed Chinese developer Country Garden says it is unlikely to honor all offshore debt payments on time, signaling it's set for its first ever default. Bloomberg's Rebecca Chung-Wilkins joins us now from Hong Kong. So, Rebecca, what exactly is the latest on Country Garden?
Yeah, so we're coming to the end of that 30-day grace period. We're expecting that to end today. And as you say, the overall expectation, particularly after that Country Garden statement, is that it is going to default. It'll be its first default on a public bond offshore. And while this has been the expectation for some time, the bonds have traded well below 10 cents on the dollar in deep distressed territory through this month. It is an important sort of data point to see a firm like Country Garden struggle in this way. It's an important marker, really, of where we are in the distress cycle for China property too. I mean, at one point this was the largest property firm in China, and it's not an Evergrande. By comparison, this is a firm that's borrowed much more responsibly. It didn't expand into a conglomerate buying all sorts of kind of unrelated industries, and it's still a very, very big player in China. It employs around 60,000 people, 3,000 outstanding projects, and 186 billion in liabilities. So the consequences, even though they are expected, are really significant. And it is disappointing, I think, for China, which has tried so hard to try and bottom out the crisis more broadly, to still be seeing a failure of this sort.
Rebecca, on the economy, of course, all eyes on President Biden, who's just touched down in Tel Aviv. A wider conflict could endanger crude flows. We also have the president of Russia meeting with the Chinese president. And then we had data out of China today, better than expected, but not enough to lift concerns about the nation's economic outlook.
Yeah, I think in terms of data, as you say, better than expected. So GDP in the third quarter coming out at 4.9%, really off the back of the Chinese consumer apparently somewhat back. So we saw retail sales also beating expectations at 5.5%. Looks like people are willing to spend on everything from alcohol, cars, restaurants again. The real drag, though, just touching back on Country Garden, is that issue over property. We saw disappointing sales again, 9.1% drop through September. So that is the real prevailing concern for China.
Rebecca, thank you so much. Rebecca Wilkins in Hong Kong. The U.S. President Joe Biden just landed in Israel hours after an explosion at a hospital in Gaza killed hundreds and threatened to plunge the region into chaos.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in global leadership leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
From New York City, from London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
President Joe Biden has touched down in Israel with tensions high after an explosion at a Gaza hospital killed hundreds of people. Hamas and Israel trade blame. Elsewhere, the pound gains after inflation in the UK proves stickier than expected, leaving open the possibility of a further rate hike from the Bank of England. Plus, shares fall in ASML, after orders plunge in the third quarter amid a sector-wide slump in the semiconductor industry. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. President Joe Biden has arrived in Israel. It comes as hundreds of people have been killed in an explosion at a Gaza City hospital, according to officials in the Hamas-controlled territory. Now, the Palestinian Authority and countries including Jordan, Egypt, and Turkey have blamed Israel.
What happened tonight is a great tragedy and a horrifying war massacre that cannot be ignored or allowed to pass without accountability. This aggression against our people must stop, and these crimes must come to an end.
Israel denies responsibility, with the Prime Minister, Benjamin Netanyahu, posting on X, formerly known as Twitter, "The entire world should know it was a barbaric terrorist in Gaza that attacked the hospital in Gaza and not the IDF." Meanwhile, Egypt has rejected any attempt to move Palestinians into Sinai, saying it would create a base for the opposition. EU leaders have also condemned the deadly strike on the Gaza hospital. Bloomberg's Maria Tadeo is in Brussels. So, Maria, how have EU leaders been responding to the hospital blast, and will it make a real difference?
Yes, Francine, good morning. And look, the mood today in Brussels among the European institutions is that risks in this region are now manifesting, and really manifesting greatly. They also note, of course, that explosion in the hospital that took place yesterday has really changed the mood this morning. And in fact, speaking of that today, the head of the European Commission, Ursula von der Leyen, spoke before the European Parliament, and now she talks about the fury of war that has been unleashed on civilians, repeating that they have to be protected. The pictures, she says, coming out of Gaza are now horrifying, and the world needs to take note. Let's take a look.
The scenes from Al-Ali Hospital are horrifying and distressing. There is no excuse for hitting a hospital full of civilians. All facts need to be established, and those responsible must be held accountable. In this tragic hour, we must all redouble our efforts to protect civilians from the fury of this war.
And that was Ursula von der Leyen, the head of the Commission. As you noted, Francine, she talks about an investigation, finding out who is behind this. But she also says the terror has been unleashed by Hamas. The world should not lose sight of that. She notes that has triggered this new spiral of violence between Israel and Palestine. But she is very clear there needs to be an investigation to figure out and find out what happens here. But as I see, the mood this morning is almost that this region is now almost a breaking point.
Maria, is the EU, with their connections, trying to get support of de-escalation from China or elsewhere in the world?
Yes, and Francine, that's an excellent question, because we know that behind the scenes there has been a flurry now of calls between European officials, also Arab leaders. We know also yesterday Olaf Scholz was in Israel. We know, too, or should note, that Emmanuel Macron has noted that he is planning on visiting the region if there's a specific agenda that he can work with. And also on that note, on top of the condemnation to this blast in the hospital, the French president this morning once again repeated there needs to be humanitarian corridors, and they need to open without delay. And Francine, that is a huge point of tension at this point, because it comes down to Egypt. It's the Egyptians that hold the key to one of the main corridors that could open. What I'm being told, however, from European leaders involved, European officials in conversations like this, is that the Egyptians really feel there could be a mass exodus of people. So they worry about the numbers, but they worry too that this could be a permanent move. So what I'm being told is that for the time being, the Egyptians are almost overwhelmed at the prospect of a mass exodus of people.
And Maria, at the same time, it's very clear that last week, after the start of this horrific war, Europe was not speaking on the same page, right? Leaders had their own thoughts. Have they now come together and speak with a stronger voice? And have they been much more firm with Israel?
Yes, and Francine, as you know, a lot of this started a real political storm, not just in Brussels, but really across Europe. It has to do mainly focused on that visit by von der Leyen to Israel. The criticism there was that she seemed almost too one-sided, that she did not talk about the humanitarian issues, that she did not talk about the civilians. We see this morning that she is, to some extent, correcting that note, saying that civilians have to be protected. She talks about the fire and the fury of war on civilians that has to stop. She says, having said that, what she repeats, and I'm being told she believes it's her duty to say, is that the responsibility of all of this starts with that terror attack in Israel, and it comes down to Hamas. So it is a difficult, sometimes diplomatic act for the European Union to sound very strongly on those terms, to support the Israeli people, which obviously they want, but also be diplomatic on the idea that civilians who are not to blame for this have been put on the line. So it's a diplomatic threat at times that's complicated for the European Union, on top of the fact that we know there are real tensions at times between the different personalities and institutions. Having said that, I was told yesterday that now when you look at the European Council and the European Commission, there is less tension, and it is clear now to everyone that they need to coordinate better and work together over the next days and probably weeks.
Maria, thanks so much. Maria Tadeo there in Brussels. Now let's also get straight to Bloomberg's Oliver Crook, who's in Tel Aviv, where just moments ago, about 30 minutes ago, the President of the United States touched down in Tel Aviv. What are we expecting from this diplomatic mission?
That's right, Francine. Well, we're expecting an awful lot less than we were expecting about 12 hours ago, before that hospital blast that we had overnight. What we were hoping from Biden and expecting from Biden is for him to arrive in Tel Aviv as the first part of a two-part trip and then go over to Jordan. That second part of the trip has now been canceled. So we're in central Tel Aviv, where we expect the president to arrive any moment now. He will be meeting with Antony Blinken, who is here already, of course, and the Israeli leadership. And again, his purpose here was threefold. One is to show the unflinching support for Israel, which is the position that has been espoused by every single U.S. delegate who has arrived in Israel. The second is a question of deterrence on other actors to get involved. We see that with 2 aircraft carrier groups moving to the Eastern Mediterranean, 2,000 American troops on high alert. And of course, the third, which is arguably the most important, is the diplomatic side of this, right? Is trying to bring in other leaders from the region into the discussion, trying to get aid into Gaza, but also trying to de-escalate the situation and work the back channels there. That part of the trip, arguably the most important, has now been scuppered. He was supposed to go to Jordan to meet the president of Egypt, El-Sisi, the president of the Palestinian Authority that presides over the West Bank, Mahmoud Abbas, and also with the King of Jordan, and they have canceled the trip after that blast. And of course, that complicates a situation for Biden, which is already almost impossible.
Oliver, thank you so much. Bloomberg's Oliver Crook there, of course, live in Tel Aviv. We'll continue to bring you the latest from President Biden's visit to Israel, the Middle East, and, of course, the reaction of countries that have decided that they will not meet with the president. This is Bloomberg.
younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
The conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now, the Open Society Barometer, a study of global public opinion on democracy across 30 countries, finds the majority of respondents fear violence due to political unrest. Democracy remains popular across the globe, but the poll found lower levels of support amongst young people as the world faces multiple challenges and patchy evidence that democracies are improving the lives of their citizens. Well, joining us now is Mark Malloch-Brown. He's the president of Open Society Foundations. He's also former UN Deputy Secretary General. Thank you for joining us. Mr. Malloch-Brown, when you look at the horrific events that have been unfolding and the serious risk of escalation in it, what does it mean for the world, actually, for the world of geopolitics and possibly democracies across the world?
Well, I think for democracies, it's quite a rebuke in a way. It's a validation of the importance of people being allowed a say in their governance and future. But, what this indicates is a place where that had entirely broken down. Nothing excuses the horrendous, inhuman attacks on Israeli civilians. But, Gaza is an area which feels it has no political future, and that has led to this, violent challenge to the status quo, both in the Middle East, but by implication more broadly. And that's where, in a sense, the case for democracy is more at risk, which is, this is a poll that shows that people everywhere still prefer democracy as a preferred form of government, but are increasingly dubious about can it deliver. And, I think one of the threats it faces immediately is the world dividing in a kind of post 9/11 way between the West and the rest. And, I know President Biden's trip was intended to head that off, but of course, he's now got real headwinds.
Mark, we're also looking at pictures of the Prime Minister of Israel, Benjamin Netanyahu. We're following what he's saying. He's with the U.S. President Joe Biden, who's arrived in Israel about 40 minutes ago. How incredible, actually, is it to see an 80-year-old president being flown in places where there's war? What does it mean for the need of de-escalation? And actually, what do you think the President Biden needs to do today? Is it a complete ceasefire? How does he de-escalate this?
Well, it's a brave and ambitious step, and of course has been, why has he done it? Because he felt that his years of credit with Israel as a staunch defender of Israel in his years in the Senate, but equally his long relationships with King Abdullah of Jordan and others would allow him a kind of to apply his empathy and listening to find a way to de-escalate this. And now, of course, he's a mission which has lost one of its legs because there is no visit to Jordan or meeting with the Arab leaders. So that sort of empathetic diplomacy is now fatally damaged, really, and hobbling. It's as I say, it's missing a leg, and that is going to be a real challenge, because there is a good reason why, even if you go back to the Yom Kippur War, it wasn't President Nixon or President Ford who flew out in that period. It was the National Security Advisor and then Secretary of State Henry Kissinger, and every other time since, it's been secretaries of state who've really taken the strain on this, because you kind of want to keep the president back, protected from the very unpredictable nature of Middle East diplomacy, and allow them to bless a deal once it happens at Camp David or the White House. So this is Biden plunging in, and it's brave, and given the terrible situation, important, but I have to say the odds of success are not great, and there is a real risk that the moment he leaves the region, the conflict intensifies, and that's then laid at his door, that he somehow blessed it. So it's a challenging mission.
Mark, there was this massive bombing at a Gaza city hospital, which killed at least 500 people. And again, it's led to Israel and Hamas trading blame for the attack. What's the probability of this significantly escalating? We already see tensions in the region that could intensify. Where does this end?
Well, it's obviously the first consequence was the cancellation of the meeting with the Arab leaders. There is a Security Council resolution in New York, which people hope would go through today. It now looks in a pretty parlous place because of this attack. You know, what I hope is that people can just, be level-headed enough to wait for some credible international investigation of why this happened. Was it an IDF attack, or was it, as the Israelis claim, a rocket from the Palestinian side which went rogue and misfired? And it doesn't take away from the fact that when you fight in confined civilian spaces, and after all, Gaza is half the size of New York City, when you're sort of promoting war in that kind of context, huge civilian-based accidents of this kind are going to happen. So, whoever was responsible and kind of pulled the trigger, behind that is a wider lesson that conflicts of this kind will have massive civilian consequences and always be likely in breach of international humanitarian law.
Yeah. The President of the United States has just started speaking again. He's just said that actually the U.S. stands with Israel. He had condemned about 12 hours ago what happened at the hospital in Gaza. And as you say, on the back of that, Arab leaders in Turkey reacted with outrage. Jordan and the Palestinian Authority, which governs the West Bank, canceled the summit scheduled for Wednesday in the Jordanian capital of Amman with Biden, or at least that the president was meant to attend. The next 24 hours, Mark, seem extremely crucial. Can China step in? Do they want to step in? Do they have the clout to make a difference?
Well, China, of course, is still basking in having achieved a bit of a rapprochement between Iran and Saudi Arabia, a renewal of diplomatic relations. So it's become the default alternative in the region. And I think if it was to throw its weight in with the US to try and find a solution, it would be very, very powerful. But, at the moment, China and Russia in the Security Council, at least, are looking for an equivalency which does not acknowledge that this began with the brutal Hamas attack on civilians, and which calls for an immediate ceasefire, while the American position and that of Western countries is there is an Israeli right of military response against Hamas, which must be preserved, even at the same time that civilians are protected. So, the two sides are, far apart on the essentials of a way forward. And, I think the fact is both sides need to take stock. Both sides need to realize that, ultimately, whatever the feelings and blood running at the moment, ultimately there has to be a political solution, not to the Hamas crimes, but to the status of Palestinians in Gaza and the West Bank.
Mark, the $25 billion international network of foundations started by George Soros, which you're currently running, has shuttered closed offices around the world. It's prepared to cut more than 40% of its staff. Do you worry that it will be much more difficult after that to have well-functioning democracies around the world?
No, quite the opposite, actually, because, this is not because of any kind of financial need to do it. It's all about, what's the most efficient model of delivering really sharp programs which are going to be effective in protecting human rights and democracy. And the reductions and shuttering of offices actually does not reduce our geographic footprint. We are the one foundation in the world which prides ourselves on, genuinely, as much as possible, global presence.
Mark, let's just listen in. The president, of course, also saying, the U.S. President Joe Biden saying he's deeply saddened and outraged by the explosion at the hospital. He had said that about 10 hours ago, saying that the explosion appears done by the other team, not you. So this is just the latest, I think, as that short press conference or short comments to the press is just wrapping up. But Mark, thank you so much. Mark Malloch-Brown, the president of Open Society Foundations and former UN Deputy Secretary General. Of course, we know, but a good reminder, OSF is the charity founded by billionaire George Soros. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
U.S. President Joe Biden has arrived in Israel. It comes after hundreds of people were killed in an explosion at a hospital in Gaza City, with Hamas and Israel trading blame over who was responsible for the blast. Let's get straight to our Bloomberg News Director for EMEA, Rosalind Matheson. Ros, you've been helping us make sense of all of this since the very beginning. Biden was just with the Prime Minister of Israel Netanyahu, the U.S. president, saying that the explosion appears done by the other team, not you. So he was saying this, Netanyahu, so saying that this was not their rocket. Of course, this is not the side of other people in the region. Behind closed door, would he be saying another message, or is there still unwavering support for Israel?
Well, certainly the US is a very direct ally of Israel, and there is strong support for Israel in this moment. Remembering, of course, this began because Hamas attacked Israel, killing many Israeli civilians, and there's a sense in the US they've got to support Israel in this moment. They're sending military aid. Certainly the presence of Joe Biden now on the ground there is meant to reinforce that message, but also there's that rising sense of concern that things are really starting to spiral out of control. We've got desperate scenes in Gaza, humanitarian scenes there. Now we've got this hospital blast. We have Arab nations in the region. Their rhetoric is becoming much more heated. We've got concern that Iran gets drawn in. So certainly behind the scenes in those conversations, it will probably be not questioning Netanyahu and whether they still want to proceed with the ground war, but certainly cautioning about the risks involved.
So Arab leaders in Turkey reacted with outrage at this blast at the hospital. They canceled a meeting scheduled in Amman. Does this escalate? I mean, is there anything, actually, that anything can do for tensions to cool off? Is it a complete ceasefire that would even be floated?
Well, right now it's very hard to know what could help this to de-escalate, because positions, if anything, are just hardening. We're seeing, of course, protests outside Israeli embassies and other offices in the region. So those views are really hardening. And the fact that this meeting with the US president got called off makes it even more complicated. They're just refusing to meet with him in this minute. So what kind of back channels can be going on to try and calm this situation down? We know there's a lot of back channeling going on. The US has said publicly they're talking to Iran behind the scenes to de-escalate, but certainly the images on the ground in Gaza, the worsening situation in there, really seems to be hardening those views.
Why? Why hardening of views? Is it public display?
Well, certainly it's just the reality that for many people going back who've lived in Gaza, this situation for them has been quite poor for many years. It's a high-density area. They've had poor quality of living, little access sometimes to work. Now they've got questions about access to drinkable water, food, medicine, and so on. For Israel saying they've got to move south very quickly ahead of a potential ground invasion. And so the collateral of that, the concerns about that are rising. And so that's really the key question now.
Ros, thank you so much. Ros Matheson. We continue, of course, our coverage. President Joe Biden in Israel with tensions extremely high after an explosion at a Gaza hospital that killed hundreds of people.
Quite curious about why citizens' assemblies actually work. I mean, what is it about them that taps into this collective intelligence and this desire to find a consensus?
One, I think, is because they bring together this diverse group of people that in the best case scenario is actually descriptively representative of the larger population. You maximize what I call the cognitive diversity of the group. You bring poor people, you bring minorities, you bring a lot more women, you bring a lot more, young people, and these perspectives are currently lacking in our parliament. So when you bring that, the richness of perspectives and information that you get is much higher. It's really focused on, okay, we're in it together, we have a problem to solve, how do we solve it?
But you must get show-offs at these.
Oh, you do? Of course you do. But the difference is that they're not rewarded for that behavior the way
a
they
politician
are.
is rewarded.
On the contrary, it's very interesting because you do have all the human types. So you have the politicians type in those groups. But it doesn't work. You do have also natural leaders that are actually very much respected. They have an influence. Their voice, really carries a lot of weight. But that doesn't mean that they're above the others. The only thing that gives you more weight is if you have a better argument or a better information.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden arrives in Israel with tensions high after an explosion at a Gaza hospital, killing hundreds of people. Hamas and Israel trade blame. China property concerns cloud better than expected GDP data. Distressed developer Country Garden is on the brink of its first default, saying it's unlikely to honor offshore payments at this time. And two-year yields retreat from the highest level since 2006 as solid economic reports reinforce the case that the Fed will have to keep rates higher for longer. A little bit of breaking news hitting the Bloomberg terminal this morning. This is the final reading for CPI in Europe. It's at 4.5%, so it's bang in line with what the market had anticipated. The euro trades a little bit higher. We're risk off around the world this morning. Why is the dollar not higher? As Danny and I just said before we came to Earth, it's about positioning. There's extremely long dollar positions, no real reaction to the euro. But let me take you to a very immediate reaction in the bond markets. It is macro over the angst of the Middle East that is pervasive. Yes, the two-year yields, as you can see at the lower, at the bottom of the screen, did hit the highest level since 2006. When you look at 10-year yields rising this morning, the rocket fuel that went onto that bond market yesterday, the vigilantes were inspired by those retail sales. 60% probability now of an additional rate hike from the Fed in January. That's not the way the playbook was supposed to go for the bond bulls. Again, all of the haven rally that you had in the UK gilt market is gone because of sticky and pernicious inflation. This is the issue for the US, for the UK, 6.7% on inflation. Again, 30% probability of another hike in November and a 60% probability of another hike in January. Oil is exploding on the upside. This is an immediate reaction to the tensions, the rising tensions as a result of the Gaza hospital blast. That is ratcheting everything up as Biden touches down in Israel. Novak, we've heard from the Deputy Prime Minister in Russia. It's too early to talk about a November OPEC decision. All of that, Danny, with solid GDP numbers from China, but that almost seems like an afterthought this morning.
It does. And I mean, you have the likes of Goldman strategists, for example, saying that there is a risk to the equity rally from geopolitics, from the uncertainty. It's something we talked about when the attack first happened, when Hamas first attacked Israel. it's not gone away. And at the same time, Goldman also says that there's this potential for a fourth quarter pothole in growth. You add all of that together, it's difficult for equities. S&P down about 0.2%. Tech does even worse this morning, as it did yesterday, with higher yields. European equities struggling for direction. We've been flipping back and forth between red and green. It's ASML earnings. Those orders were weak. That's helping to drag down the overall index. And Manus, you mentioned this. The China data, it was stronger, has growth bottom, but the equity market doesn't care. It cares about the issues over at Country Garden and property developers. I have a Bloomberg Intelligence Index of developers down at a 2009 low. And Manus, as you mentioned, the data has been strong. We had that strong retail sales data yesterday. The death of the consumer has been largely exaggerated. And we have, for example, Moynihan from Bank of America yesterday telling our David Weston that the Fed has done its job when it comes to consumers. There are cracks starting to show. The issue is, Manus, it's not showing up in the macro data yet, and it's challenging our assumptions that the consumer will eventually cave.
Look, it is challenging the very core of that. The question is, do we just keep on spending until these savings run out? The phrase that has caught my ears in the past 48 hours is from the RBA, which Stephen Major talks about le tête peloton in terms of what they do in Australia is pervasive across central banking. They are saying that they have a low tolerance for this inflation. We are moving into phase 3 of inflation and phase 3 of central banking, Danny, which is the risk of pernicious inflation. So that's the real risk for the bond market.
Yeah. Yeah, and I think we have a board of the global bonds. You can see that impact. It's not just the U.S., it's not just the U.K. As you mentioned, Manus, it's Australia, yields moving there very decisively. And then also, at the same time, you have Japan needing to step in yet again with some unscheduled bond buying. This is a global bond market that is having to readjust.
Yes, and we see that the tolerance from the Bank of Japan is fairly low when it comes to allowing that bond market to perhaps become a little bit more unleashed. Let's reset to our top story. The U.S. President Joe Biden has landed, touchdown, and met with the Israeli Prime Minister Benjamin Netanyahu hours after an explosion at a hospital in Gaza, killing hundreds. Joining us now from Tel Aviv is Oliver Crook on the ground. Oliver, good to have you with us again this morning. The significance of Biden touching down in the Middle East. What exactly is the mission? What will mission accomplished mean?
Manus, if this was a difficult mission to accomplish yesterday, it is an almost impossible one to accomplish today after those images and after what we've heard overnight with the explosion at the hospital in Gaza. He was supposed to arrive here. He's in the building right now. He's meeting with Prime Minister Benjamin Netanyahu, Antony Blinken, and Israeli leadership. They arrived just a few minutes ago. Netanyahu was on the tarmac to greet him. Obviously, a very welcome sign here for the Israelis. If he had 3 missions here, the first is to support Israel, which has been everything that we've heard from everybody from the U.S. administration who has come here, including Chuck Schumer and 4 other senators who were in this very building just a few days ago. The second is about deterrence. We know we have a second aircraft carrier group in the Eastern Mediterranean, 2,000 U.S. troops on high alert. But the third, Manus, and this is the most crucial, arguably, in terms of de-escalating the situation and in sort of bringing the temperature down, it's diplomacy. And it was supposed to be a 2-legged trip, Tel Aviv and Jordan, that second half of the trip where he was supposed to meet with the Egyptian president, the Jordanian king, and Mahmoud Abbas, the president of the Palestinian Authority. That is off the table.
And of course, it follows that explosion at the hospital in Gaza. Of course, it's not quite clear yet what exactly has happened there. A lot of trading of blame. What is the latest on the ground with that, Oliver?
So we know from the Palestinian health authorities that 500 at least were killed in the blast yesterday. We know that would bring the death toll to well over 3,000 people, as it was already approaching yesterday. There has been sort of universal condolences and condemnation. However, the attribution has not been universal. Many of the Middle Eastern neighbors were quick to blame Israel, saying that it was a bombardment that caused the blast. Netanyahu said that it was not a target, and the IDF has said that it was a failed rocket from people within Gaza that went out and fired. And today, Biden, just moments ago, seemed to suggest that the intelligence that he has seen this so far confirms that. But again, we do not have enough information on that yet.
Well, the president has said that he's outraged, deeply saddened by the explosion in the Al-Ahli Arab hospital in Gaza. But then you look at Saudi Arabia's response Oliver. And again, this is where the tension really, really does come to the fore. Saudi Arabia saying it was a heinous crime committed by Israeli occupation forces. So again, these divisions are, this blame, this accusation between sides is rising. The international response this morning, what have you got? What have you heard?
Yeah, so again, from the European side, it's been, you know, again, a lot of sorrow and condemnation, but not, again, attributing it. But what we've seen in the streets is something very different. From the bombing, from the news of the bombing last night, we had protests across Lebanon, Jordan, the West Bank, Turkey. And so, again, this is inflaming the situation, turning the pressure cooker up significantly in front of the Israeli embassy, we understand, today in Turkey, but also the United States, who has stood very firmly behind Israel. And there's a degree to which, Manis, that despite whoever did this or whoever is to blame for it, it's 500 more innocent people dead, and that only makes this situation much more complicated.
Indeed. Oliver, thank you for covering the latest for us. That is Oliver Crook in Tel Aviv. Now, let's turn our attention to China, where President Xi Jinping has defended his flagship Belt and Road Initiative, casting the $1 trillion program as a driver of global growth.
China can only do well when the world is doing well. When China does well, the world will get even better.
Let's get to Bloomberg's China economy and government editor, Rebecca Chung-Wilkins, who joins us now. So, Rebecca, we started the morning here in Europe with data out of China. It was better than expected. But if you just look at the reaction from the equity market, for example, you don't have that lift that you think you would get if you alleviated concerns about the economic outlook. Why? Why isn't this more of a relief?
Well, yeah, as you say, GDP came in 4.9%, higher than expected, and really driven by retail. It looks like the Chinese consumer is out. They're buying everything from alcohol, restaurant cars. The drag here that you point to, and the reason why the response in equities has been so lackluster, is really all about property. And it comes down to Country Garden. Now, not an enormous surprise here, but a really important data point in how investors are juggling just where we are in this distressed credit cycle for the property market in China. We are on the last day of a grace period for an offshore bond and expecting to see Country Garden's first ever default in the offshore bond market. And even though it was somewhat trailed, and the company itself has put out a statement to Bloomberg News saying that it's not going to make all its offshore bond payments, it's sort of a very painful reminder that the worst is not over for property developers. Even a developer like Country Garden, which borrowed relatively responsible, this was not an Evergrande that sort of expanded into all sorts of other businesses and unrelated areas. It also is a really major player, formerly China's largest, now about 7th largest, sort of 3,000 projects that it's still working on, 60,000 employees, and $186 billion in liabilities. So it is a really large firm to be going through this type of pain so late in what has been a very long distressed debt cycle for the property market.
Well, we're seeing the weight of that this morning, Rebecca, in New York later in the afternoon for you. You got property stocks, China property stocks at the lowest since 2009. The bigger market debate, Rebecca, is whether this cathartic, painful moment for Country Garden and the property sector indicates some kind of a basing in the dip in growth and a basing in perhaps the pain of the property sector. What are people saying to you on that particular tenor?
I think there's still a lot of caution that the worst is not over for property. And even when we look, for example, at sales through this year, through to September, down 9%, worse than expected. And we are not seeing the type of recovery that we thought. The other indicator is Golden Week, when we expect to see a big boost in sales typically in China. That, again, underperformed. We just aren't seeing the follow-through, the positive effects of all of the easing measures that we've had to help, for example, boost buying, make it cheaper, make it easier to borrow. People are just not convinced, and confidence in the property sector is still very, very fragile. And it's interesting that that is still persisting, even though the economy more broadly is improving. And for example, unemployment figures are the best they've been since late 2021.
Right. Well, I'll tell you what, Rebecca, it's certainly cheaper to buy a bottle of booze than it is a home. Rebecca Chung-Wilkins there. Thank you so much with the latest. Now let's get you some other top stories that are trending on the terminal this morning. In the UK, Manus mentioned this, inflation failed to slow as forecast in September, leaving open the possibility of a further BOE rate hike. CPI rose 6.7% from a year earlier. That's the same pace as the previous month. Rising oil prices did offset downward pressure from food costs.
ASML's order intake plunged 42% in the third quarter amid a sector-wide slump in the semiconductor industry. Slumping demand elsewhere made China, ASML's biggest market last quarter, overtake Taiwan. China now accounts for nearly half of ASML's sales around the world.
And United Airlines is projecting a fourth quarter profit that falls short of analyst estimates. The carrier faces pressure from a suspension of flights to Tel Aviv and higher jet fuel costs.
Coming up in the show, a mixed bag for U.S. bank earnings. We'll take stock of what Wall Street's quarterly results really told us. And we speak to the founder and the CEO of the Macro Compass about the surprising strength in retail sales. Is it all that hot? Right here on Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg Brief. I'm Manus Granny in New York. Danny Berger alongside me in London. 2 years popped and rocked yesterday. It was macro data which usurped the concerns about what's happening in the world. The highest rates since 2006 on the very short end of the U.S. curve. We've just retreated ever so slightly from that. Global bonds are having their moment, as it were. All of the haven bids have disappeared from most of these markets, especially in the UK as well. We have strong inflation. Let's take the concept of what happened yesterday and in the past 10 days to Alfonso Pecatillo, founder, CEO of the Macro Compass. So here we are. The bond markets are squarely back on macro over the geopolitical risk. The issue is this. Stephen Major, I had a coffee with him as he left the building the other morning. He said, Manus, 2013, it was higher for longer. That was forward guidance. Here we are. Nobody wants to say it. It's higher for shorter. But the data is not playing along with that game. So do you think we are going to push higher in rates for a short period of time?
So basically, the way I see this is we're pretty much in a situation similar to 2007, when the Federal Reserve had hiked rates to 5.25%, and they stopped hiking for 15 months, basically. So they kept this higher for longer stance for a while, even though inflation was coming down. And today you have about 2/3 of the CPI basket, which is already annualizing close to the Fed target. It's already close to 2%. And then we have another third of the basket, which is mostly shelter and energy, which is really still printing higher. But overall, Manus, you have this stance from the Fed. They want to keep rates restrictive, even though inflation and economic growth slow down. What that does is it mechanically makes policy tighter. If you keep the same level of nominal Fed funds while real growth and inflation are coming down, you are mechanically applying a tighter policy. The Fed wants that. They want to do that. The problem is, do they manage to find the right equilibrium by keeping that policy tight while the economy slows down without breaking something? That's the real question.
Alfonso, I mean, on a bigger picture level, you point this out in your work that we're in for more volatility when it comes to inflation from here on out. We've seen the reaction in bonds. Bonds are not that port in the storm when the shock is coming from inflation. What does that mean then for asset allocation? Where do bonds belong in a portfolio when things like 60-40 and risk parity relied on the decade of a bond bull market?
This is a great question, and I think this should be at the forefront of every asset allocator in the world.